Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Keith Weiner, founder and CEO of Monetary Metals. Keith, thank you so much for coming down to Wall Street Silver.
Thanks for having me, Ivan.
Yeah, it's such a pleasure having you come down to Wall Street Silver. I wanted to get you on and talk about everything that's happening in the silver and the gold market. But first, let's start off with, a little bit about yourself. When did you first get into the precious metals industry? Do you remember your first gold and silver purchase?
So I am kind of a serial entrepreneur. I sold a software company that I built from 1994 to 2008 in August 19 to 2008. So very surreal experience. Um, and almost immediately after the acquisition closed, the world began to spiral over the edge.
Right,
So I was just obsessed with, okay, what's going on? And how do I protect myself? Because I had cash at that point and I didn't want to lose it.
right.
So, what do I do? How do I do it? Where do I go? And I just started to read 10 hours a day, 6, 7 days a week. The mainstream stuff was pretty much useless, not just TV, but even the Wall Street Journal, Investor Business Daily, Barron's, had some interesting stuff, but it didn't seem like anybody was really getting to the bottom of it.
Right.
And so, I started to realize something was wrong in the monetary system by late fall of '08 and made my first gold purchase probably in the $800 range,
Wow.
somewhere around there. Not a lot, but just like, okay, I feel like I need to do something. And so I did that. And the more I studied, the more I realized gold is money. And what we have today is, it's almost like somebody's playing, it's like an episode of The Twilight Zone. Let's see what happens. We
Yes.
we take away all their money and replace it with irredeemable credit. Let's see if anybody notices. Dee, 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 And like we're in the end, we're like just before the commercial break, before the final denouement of that story. That's where we're at right now. So as I studied it more and more, and I was thinking, okay, what's my next venture going to be? In a normal world, I would have done another software company. By
Right.
that point, I'd kind of figured out the software business. My team had followed me to hell and back together, and they're like, okay, what's the next venture? We're ready to jump.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Um, and I said, well, I'm unfortunately, I see a problem in the monetary system, and gold is part of the solution, and I want to be doing something as part of the solution. I want to be helping fix it. And so realize that interest is the key to the whole thing. We can talk about that if you want.
Yeah.
So I want to offer interest on gold paid in gold, interest on silver paid in silver, and that's what I want to do. And I think that's a key part of the solution. And
So,
so
so talk a little bit about that, Keith. What is your whole, fundamental on that interest on gold, and how do you think that will work or save people and the economy?
so the interest rate's the regulator of flow of gold or silver for that matter to the market.
Hmm.
Um, uh, if there's no interest rate in gold, if no interest is available, then the only thing people can do is hoard it. Economists hate the term hoarding. Even Mises calls it Deus ex machina, machine is God. It's a hand wavy thing for economists, but it's very real.
Right.
If people don't either like the interest rate on offer or they don't trust the system, they'll just take the gold and home and stick it under the mattress, under the floorboards, wherever it is that they hide these things. So imagine you had an actual working gold coin standard. Gold's circulating in the economy. People are depositing gold in the banks. People are being paid their wages in gold or silver. Imagine that's actually working. And
Wow.
something happened, without saying what necessarily, but something happened and the interest rate goes to zero. Well, people aren't going to lend their gold anymore for no interest. I mean, you can get
Right.
away with that in paper because they're kind of trapped. They're disenfranchised in a paper currency system. But in gold, they'll just take their gold home. So what will happen is, workers have to save. So they start picking the gold coins out of circulation. And even if they had been circulating, in short order, they'll all be picked out of circulation and they won't be in the market anymore. Then they go into private hoards where they don't move except when somebody gets sick and tired of holding it, or they pass away and their heirs don't want it, or need the
Right.
liquidity, whatever, and sell it. Other than that, the gold disappears. And that's exactly where we are today. So to reverse this, there's a quote from Keynes that I think a lot about. And most gold people would be familiar with the first part of it because he says there's no surer way to overthrow the capitalist order than by debauching the money.
Wow.
And most people think, okay, he's talking about inflation, blah, 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 blah. But he ends the quote by saying, and it you know, leverages all of the hidden forces of economics to destroy, and not one in a million can recognize what's going on.
Right.
Now, I'm old enough just to remember the late 1970s when inflation was truly rampant. And let me tell you, everybody talked about inflation every day. It was on the nightly news 5 days a week. They talked about
Really?
inflation. They talked about the misery index, which is inflation plus unemployment. Today, everyone's talking about inflation. If Keynes meant that not one in a million would recognize inflation, he was a moron. Because everybody recognized it. And I don't think Keynes was a moron. I think he was, I mean, evil, but I think he was a genius.
Right.
And so I think he was talking about something else. And what he's talking about in other places, he gives it away, is pushing the interest rate to zero. And if you push the interest rate to zero, then asset prices go to infinity and everybody loves a bull market. That's why they can't recognize the destruction because they're having too much fun trading assets which are going up. And so,
Wow.
anyways, I think about that, engaging the hidden forces of economics, which today we would call incentives, in favor of destruction. I'm like, okay, well, what if you didn't want to destroy? What if you weren't some nihilist like the Joker and Batman who just wants to burn the world down? What if
Hmm.
you actually wanted to not have that happen? What if you said, I actually like living in civilization and don't want to see it collapse into barbarism and like a dark age?
Yeah, complete
What if you want to
chaos.
receive it? What would you do? And it was like, well, ding, you offer interest on gold, and then people will bring you the gold. That was the economic thesis that became the business thesis for monetary metals. If we offer interest on gold, then people will bring the gold because people, it's greed, profit, right? People
Right,
want to
right.
make money.
People want to make money
And
off of their
so
investment.
I argue that a good working definition, not a formal definition, but a good working definition of gold standard, when anybody who wants to can deposit their gold and earn interest on their gold in gold, that's a working gold standard. So that's what we're trying to bring about. And the reason is if we're paying interest on gold, that means we're financing something productive. This is not some self-referential platform where you see, you give me the gold and I pay you the interest on it. And what I do is I buy this leverage instrument, which I sell to the next guy, and he's getting interest. And what he does is he levers that up, like
Yeah,
what
the
Celsius did at one point.
right.
This is like, we have a mining company where right now we have a silver bond paying 12%, silver for accredited investors only on this one. But there's an actual mining company that is building a processing plant and needs, 1 million ounces of silver financing. And how are they going to pay it back? They're digging silver out of the ground,
Wow.
right? So if you finance production in metal, then that, first of all, simplifies their life, offers a return on real money, paid in real money to the investor, and, restarts uh, something that used to work perfectly fine until by degrees, first in 1913, they created the Fed. 1933, President Roosevelt infamously confiscated the gold.
Right.
1971, Nixon. And by the way, everyone, if you haven't seen the Nixon speech, he was on TV in 1971 where he defaulted on the gold obligations. It's on YouTube. Everybody, it's like 20 seconds. Everybody should watch this mendacious liar talking about temporarily, blah, 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 as he says it. They destroyed the gold standard. And,
Right.
all the elements are there to restart it. And that's my crazy vision.
That's a fantastic vision, Keith, because imagine if the world actually ran on that monetary metals idea or, that system. Imagine if the US economy ran on that. That would be massive. But they would never want that. Hey, Keith, because they can't have 0% interest rates. They can't print into infinity. They can't print and just have
So
ultimate debt.
here's where we run into interesting dichotomy. If you ask people, and even I call them the otherwise free marketers, the
Yeah.
people who tell you what's wrong with a minimum wage or rent control or tariffs or whatever, when it comes to money, somehow they think, well, the government has to issue it by fiat, and then you need monetary policy, and you need 2% inflation. You see, because what happened, like it
Right,
becomes this
right.
whole thing. But so when you ask the average person about it, they justify a central bank and monetary policy. But when people think of their own personal wealth and their savings and how to protect themselves, well, they think inflation is for everybody else,
Right.
right? And then they want some asset that's going to protect them. So, by offering interest on it, we're appealing to people's self-interest, which is actually a good thing. I mean, we demonize self-interest so much,
Yeah.
society, literature, comic books, I mean, school, you name it. But, we're appealing to people's self-interest and saying, look, regardless of how you vote, regardless of what you think about any of this stuff, wouldn't you like to get a return on metal, which isn't subject to inflation and debauchery and debasement and abuse
Absolutely.
and quantitative easing and all these things? And you know what? The answer we can now say we've conducted this experiment, right? And now after we've been doing this for 8 years, we can now say yes, they actually do respond favorably to that.
Oh yeah.
And we don't ask our customers what their politics are. I
No.
mean, I'm sure a lot
The,
of them would be what you call right wing, but a lot of them aren't.
right.
It's
They
just
just want to
because
protect themselves. They just want to
yeah,
protect
exactly.
themselves. Yeah, they all have the
This is
same
what they're all
common.
about.
Yeah.
Gold was the thing that people could agree on when they didn't agree on anything else. And the irony of the whole thing when people say, gold's going to bring about peace, which I certainly think it defunds the welfare warfare state massively. But the
Yeah.
19th century was a time of the gold standard, and there was almost constant war in Europe. And the thing about gold was they didn't have to agree to take one country's paper credit, and they didn't agree on that. But what they agreed was gold, on the barrelhead to pay for whatever it was money good. It
Right.
didn't need any further justification or trust or anything else. As long as it's a good gold coin, you take it, and by weight, obviously.
Yeah.
And
And that's for thousands of years, not compared to fiat. Fiat is just paper.
right,
Yeah.
the first gold coin is like 600 BC, and they were actually using gold long before that, just not in coin form. So it was harder because you didn't know the purity. You had to weigh it. You had to assay it.
Right.
After 600 BC, the first coin standardized it, and as long as you trusted that king not to dilute the metal, which of course the Roman Empire got very good at. I'm sure everybody's seen pictures of the silver denarius.
Yeah.
Every 20 or 50 years or whatever it is, there's like more brass and less silver in it. And by
Right.
the end, there's like almost no silver in it. And,
And then
you know,
the economy fall apart.
yeah, right. And they killed themselves for a lot of reasons, but I think that was a big contributing factor.
Yeah.
And
That's
so
it's
that's the
yeah.
vision. That's it.
Yeah, what a beautiful vision. Like, and I bet you, if you take like what you were saying earlier, Keith, if you take someone who's, it doesn't matter what their politics are. If you take someone from the left and you take someone from the right, and they both care about their savings and wealth, and they understand, actual monetary policy and what's going on in the world, they're both going to go for gold. They'll both be on the same page, with that. Do you think the trajectory of gold and silver this year alone has shocked you, or no? This has been inevitable, even when you bought your first gold coin back at $800 in 2008.
Yeah, I mean, clearly paper currencies are designed to go down, and they're pretty successful at achieving that objective.
Right.
So, long term, of course, and then obviously we had a long bear market in gold and especially silver after 2011. I kind of made, not enemies, but I pissed a lot of people off all during those dark years. Every time, the price of gold or silver would blip, I'd put out an article that's, and of course, all the gold and silver people would be like, oh, this is it, moonshot, blah, 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 blah. And I'm like, this isn't durable, this isn't sustainable, this isn't the moonshot you're looking for. Sorry, guys.
Right.
And, this like they started calling me a perma bear. And I wasn't. I was just looking at the data. And we have some really interesting data on our website, which I give away for free on
Yes. I'll
monetarymetals.com.
put the link in the description below. So everyone who wants to look at those, the link in the description below, check out their website.
Yeah, there's like 60 some odd charts that we're kind of the unique providers of,
Nice.
what's going on in the market. But anyway, I can see it in the data. Look, it's not going to happen. But post 2020 and COVID, and certainly in the last, call it year and a half, um, I've really come out very strongly and said, this is a bull market. This is not the sell the blips bear market of 2012 to 2018 or whatever. This is a
Right.
bull market. This is a buy the dips bull market because all the drivers have changed, as well as our data shows it as well. And anyway, so you said, did this surprise me this year? And it's a funny question. Funny you asked me that because every year we put out a gold market outlook report. It takes a fair bit of time to write. It's whatever 10,000 words or something. And so I finished writing it in kind of mid to late January.
Mm-hmm.
And then the risk I take, right? So we have a marketing team and they make it really look good and they put in professional infographics and all this stuff. And by the
Nice.
time it comes out, there's a delay of whatever a month. And so the risk is if I said the price is going to go up, it's either crash and I look like a moron, like the day the report hit, the market's already done the opposite of what I said,
Right.
or the market goes and does exactly what I said, and then you're like, well, Keith didn't make a prediction. He just said the price is going to be what it is. But I wrote it, previously when I was sticking my neck out at the time. So
Right.
I said, look, price is going to go up, and we're likely to see 23 or 2400. I don't remember what the exact prediction was anymore. Which
Right.
at the time, price was pushing 2100, I think, when I wrote it.
Yeah.
Say to 23 to 2400. Okay, that was a prediction.
Right.
Anyway, mostly that had been realized by the time the report hit. And obviously we've surpassed that, now. And so no, it didn't surprise me. It's exactly what I called for. And I'm going to call for it to continue to go because
What are you going to call for it now? What is the data showing for gold?
so right now, we have a fundamental price, which is a model, and I always have to say, there was a smart guy, a data science guy named Box. I don't remember his first name, and so you can almost call this Box's rule or Box's law that all models are wrong, some models are useful. So we have a model that calculates what we call the fundamental price. That all it does is it attempts to back out. So in the price, there's people buying and selling metal,
Right.
and then there's people buying and selling paper
Yeah.
and or leveraged futures contracts,
Mm-hmm.
which definitely impacts the price. It's not a shunt. If you buy a futures contract, the other seller of that futures contract is buying metal in order to warehouse it for you. He's
Right.
pocketing a spread. He's not going short. Very few people want to be short the precious metals, and certainly not for a long period of time. If they're shorting it, it's only a tactical, short, quick
Absolutely.
play. So what if we back out the actions of the speculators? Because the speculators get 20 to 1 leverage in futures.
Mm-hmm.
What if we could back out the effect on the price? A picture you have like two steel posts, right? And there's a rubber band that's, somewhat tight between, but not super, super tight
Right.
between two posts. And there's times when the speculators are bullish and they're pushing up on that rubber band, and there's times when they're bearish and pushing down. What if we
Mm-hmm.
could take that out and say, what's flat at this moment? And so we have our methodology for doing that. We document that in a white paper. It's on our website for people that are interested in techie sort of things. And we currently have a fundamental price of 2660, roughly.
Wow, that's good.
So it's quite a bit above market. Now, does that mean that necessarily going to happen tomorrow morning? No.
No. Yeah.
Does that mean that's going to happen at all? No, because every day is a dynamic where the fundamentals are changing and the market price is changing. It's very iterative and it's like mutually recursive.
Right.
But what it's saying is there's a tension in the market, which is that rubber band's pushed down. And if that pusher is ever released, the price won't to snap up. Reversion to the mean would be 2600 and change, not 2300 and change.
Yeah.
And in silver, it's currently in the 32, it's a bit over $32. So again, above market is where the price wants to be at the moment.
Nice. Yeah, no, it's very exciting times now for precious metals, especially with all the crazy stuff that's happening in the world and monetary policies, central banks buying gold at record pace. It's absolutely crazy. But Keith, I just wanted to thank you so much for coming down to Wall Street Silver, and I'll put the link in the description to the Monetary Metals website below so everyone can get in there and go to check out your guys' articles and the rest of the stuff. But Keith, again, thank you so much for coming down to Wall Street Silver. I'd love to have you back on as of course, gold and silver continues to develop.
Great conversation. Give me a call if you want me back.
Yeah, absolutely. Talk to you soon, Keith.
All right, thanks so much.